Review today, midweek, September 23rd, 2020. We look at the private equity, venture capital, and capital investment space. Yesterday was a big day in the Nigerian financial market and economy as the Central Bank of Nigeria held its Monetary Policy Committee meeting for September 2020. At the end of the meeting, against many expectations, the Central Bank of Nigeria Governor, Mr. Godwin Emefiele, announced a reduction of the monetary policy rate by 100 basis points from 13.5% to 12.5%. He also adjusted the asymmetrical corridor from the initial plus 200 and minus 500% to plus 100% and minus 700% in terms of adjustment, but retained the cash reserve ratio and liquidity ratio. Liquidity ratio is 27.5%. So today we'll be looking at the Central Bank monetary policy decision, implications for private capital investments and the Nigerian markets. With me to lead this conversation is an investment professional, Mr. Ebo Ayodeji. Nice to have you once again on our show.
Yeah, thanks. Thank you for having me.
All right, Mr. Ayodeji, like other analysts, were you surprised at the decision of the MPC to reduce monetary policy rate by 100 basis points? Initially, the thinking was around a hold, at least for now, a dovish approach, wait and see how the economic indicators will play out.
Yes, also caught us unawares. It was a surprise because we, based on our views, we've seen how, we've looked at how MPR has influenced lending, creation of assets in the banking system in the past years, and we feel it's been ineffective. We've seen CBN apply other unorthodox policies, and also we see the bank intervention, loan to deposit ratio that have helped grow the creation of loans. So most times we see that reference rate as doesn't really translate. The correlation is really very low when you compare it to lending rates. Yes, sometimes you may see for the prime lending rate, yes, for some of them that have that bargaining power. But when you also look at the current interest rate environment, the market now for the prime borrowers, they are able to raise capital via commercial paper or bonds in the market. And for the maximum lending rate that have, you hardly see, that's always very sticky downwards. And but CBN, what we would say is that CBN is trying to reinforce its determination to see how they want to lower lending rates. That's just the signal that that's that sense that by all means they want to see that lending rate comes down so that there can be some form of respite for borrowers, such that it would also improve their business. And even for the banks, CBN is also trying to take away some form of another source of income. You know, you see the standing deposit facility down from 7.5% to 4.5%, and it's been capped to 2 billion daily limits that you can place with the CBN. So we believe that CBN is just telling the banks that I'm taking away where you get income from your government securities. I'm taking away the one I also pay you directly. So please, indirectly, the only channel you can make money more now is through lending. So one focus, which is your number one objective, financial intermediation. So I believe that that's just the sense we got from that. We didn't hear any major discussion around the FX, which is also a major issue that can stall growth or can even stall the reduction of the lending.
Okay, Mr. Ebo, how will this decision to reduce the NPL against all odds affects investments, capital investments, and formation in Nigeria, because the MPC, through what the governor, the Central Bank of Nigeria said, noted very well that there has been dwindling capital flows in the bonds and the fixed income market. But overall, capital investments, private equity, venture capital firms have also been watching the space to see decisions like this, and how will this particular one now affect their decisions, signaling.
Okay, a very interesting question. And what we felt the FX was the main issue that we were expecting. Maybe there will be some form of expected policy. So most times, based on past trend, the policy may not even come at the MPC meeting, but we'll have information that there will be some policies in the coming few days based on the current situation. But we didn't, there was no information on that. And if you look, we're all talking about capital importation, whether it's the direct investment or the portfolio investment.
It has been very low this year.
Yes, one major factor that would attract them is your being able to predict the direction of your FX, being able to predict when they can leave the country, liquidity in and out. So with some of these in quote capital control that we've seen since March, or that even started early this year, with getting new investors, if you look at the capital importation report for Q2, there was no bonds transaction. It means that most of the investors are just going short, trying to wait for when CBN will supply them dollars. They were not willing to go long. So the major factor that can attract or that would ensure that we have increased capital flow, whether it's foreign direct investment, FPIs, maybe you spoke about it, private equity guys, whether it's venture capitalists, they would be looking at, they'll be looking at the FX. The FX is the major focus. If the news on ShopRite also trying to exit Nigeria, it's also a major signal that they are looking at the rate at which our currency is being devalued. Is there any hope that there will be a major respite in the near term? So for them, even if the return on that investment for any private capital is the return on the investment, even if it's 20 to 25%, and there will be a devaluation of close to 20, 25%, then it's not worth taking that investment risk or taking that decision. So I believe that what we're seeing now, even for a lot of private equity firms, they'll have to, especially for those that are sourcing their funds abroad, you have to be guaranteed, or how you must be guaranteed of a return for some, because most of them play short, maybe they say 5 years. You must be sure that if the return, your return on investment must be close to 100%, so that, or at least above 50, so that any devaluation at the point when you are exiting, because there's always that exit option that the private PE guys would like to always have. What will be that return when you are taking that, the real value of that money when you are taking back that to pay those investors that have contributed? So it's really critical that we need to have a major roundtable. We have lost the foreign direct investors. If you see, throughout this year, I don't think we've seen anything close to 200 million.
Not up to $300 million. Yes, in terms of
loans. Yes, mostly loans. Then if we now lose the FDI guys that they have been providing support, we need them. They've been providing liquidity. I always look at it as the FDIs, FX liquidity. I always look at it from a position of a bank. Most of the banks, when you check their maturity analysis, 80% of the deposits, fixed deposits, has a maturity of about 60 to 90 days. But because not everyone will come and withdraw their funds at the same time. It provides that liquidity support for the banks. So the FDI provides that liquidity. We need them to provide that liquidity support. Yes, we target hot money, but we need that support to provide liquidity while we work on the FDI. So it's really very critical. Businesses that require funds abroad now, it's difficult for them to access those funds because of the issue with our currency.
Okay. So, Mr. Bo, there has been this debate between the Nigeria Economic Summit Group and the central bank over their FX policy approach. I guess you must have read those documents where the NSG, felt that there was uncertainty, they needed more clarity in the approach so that investors, private equity investors, other key players can understand how they make their decisions, signaling. But the CBN disagreed, saying, look, it has always continued to provide that clarity when required, and touted the I&E FX window, for example, which has been able to bring some level of stability. What is your thought on this, and what should we leverage on? Because the FX issue, like you said, foreign exchange management is very critical.
Yeah, I think I would like to focus on and state maybe my view of the current FX environment. Based on even conversations when you speak with foreign investors, you speak with business owners, is once you have different segments, then there will always be room for round tripping. When you look at remittances in Nigeria, if you check on an annual basis, close to $25 billion. Most of these funds may not come in through the official channel. Once there's that spread between that official window and the black market, if MoneyGram is doing 386 and I can have 470 the black market, then I will find every means to move that funds to that market. So that's what when you have different segments and the spread is wide, it's an incentive. But even the BDCs, we don't even CBN will track the utilization of the funds, but it's just an incentive. Once they are seeing that market, people are trying to break all the controls that they can to be able to enjoy that spread, which is almost close to 100 naira. So, and even sometimes you are trying to negotiate business and you're trying to say, which rate do you want to use? Is it the CBN rate? Is it the high and the window rate? It creates sometimes confusion when you're trying to negotiate transactions. So in my view, I believe that the difference, even if the CBN decides and wants to retain these different windows, we should try to converge the rates such that there's no incentive to move from one window to the other. And that would even reduce the pressure on the FX.
Mr. Boyd, you are therefore also alluding to the positions of the IMF, International Monetary Fund, and other key stakeholders that we need to have that unification of rates. This has been a huge debate over the years. You agree with that? Yes.
You would see for them, and that's part of what I feel is also delaying the release of the $1.5 billion from the World Bank. They want, so when you look at, we always talk about the 3 subsidies. So we've given
petroleum,
the electricity, we are moving towards a cost reflective tariff. And when you come, the last one for FX. So we thought when we saw that major shift, I think about 1 or 2 months ago, thought we're going to see that improvement. And most times it's always a function of confidence. So for even the Nigerian investors, they're also trying to preserve their investment in dollars, because when you have to battle with high inflation, and you also have to battle with the devaluation, and most of the goods that you purchase are also in dollars. So to preserve your wealth, most people are speculating and keeping their funds in dollars.
So definitely, this is one area that has to be addressed. The Central Bank of Nigeria, in response to IMF, said they will work towards it. That's why I've seen some steps taken already in terms of the rates and the exchange adjustments. So that, like you said, is very key to see how that plays out towards the end of the year. But for merchant banks who also are playing in investment space to take decisions, what does this adjustment of the MPR mean to them? The 12.5% to 11.5%, and of course the symmetrical corridor of plus 100 and 700.
Yeah, I think for when you look at the core business of for merchant banks, they are to serve the institutional investors. Minimum deposits, it's taking deposit is 50 million. So that's the only difference. So they can't take any deposit less than 50 million from customers. And the major focus would be for most of the merchant banks to also see if how they can sieve out opportunities for lending. It's trying to get the right credits with minimal risk, but that risk will always be there because it's really very obvious. You have all those structural bottlenecks that adds to the cost of doing business. A lot of unpredictable events like the COVID that we saw. Yeah, oil prices. Nigeria is depending on oil prices, and there's less revenue for the government. There's also that element that would our growth rate would also be very fragile. So for the merchant banks, it's for each of them to also try to choose a major sector where they want to build that competence in. They want to understand it, and for them to be able to minimize the risk, whether they want to transfer, share risk, and the one they can live with, they need to be able to identify that. So for them, it's for most of them, because they deal with a lot of prime borrowers, so there may be some of them, they will need to negotiate. Those companies may want to renegotiate their loan on the back of the MPR. And because of the competition across, even in the market now, so they may not have any choice than to take some cut based on the reality.
All right, Mr. Bo. Now, globally, from what the central bank said, I mean, there's a lot of uncertainty at the globe, the whole COVID issue. A lot of economies are going to contract as anticipated. And for Nigeria, the volatility in the crude oil price signposts a fragile economic recovery for the country. And every country like Nigeria seeks to attract capital investments this period because that's the best way to really finance and support some level of growth and recovery. So with the second wave fears in Europe, where we have a lot of people with funds and capacity to invest in frontier markets like Nigeria, and US also grappling with its own surge of COVID and addressing the challenges domestically. Is this step taken by monetary policy and expectations for fiscal policy, are they going to really incentivize more private capital investments as we wrap up the year, 3 more months to end the year?
I think that one, Nigeria cannot even afford to have a second wave of lockdown. For the global economy, we know that it's even for most of the governments, they are also getting tired of the support based on capacity because the funding. So they are giving cut-off time for most of those interventions that they've been giving. And that means that if those interventions stop, it worsens the situation because part of what they used that was to, still sustain demand to a large extent. And if those economies are struggling, then before we begin to see investment trickled into frontier markets, though we have our own in-house problem that even if things are fine over there and things stabilize, the FX issue will still be continue to haunt us that until we are able to find a lasting solution. And beyond even finding a lasting solution, like it takes time. It's easier to bring down confidence, but for you to rebuild it, it takes a lot of time. So for most of the investors that came in on the back of the I&A window that was set up in 2016, that assured liquidity and also created some edge, some form of hedging instruments for
and predictability.
So we believe that now it's even if we solve these liquidity issues, that confidence issue is another major focus that will take a lot of time before even the fund managers looking at Nigeria gets approval for them to invest, because currently a lot of them have lost money based on the devaluation, because it's the non-deliverable forward that you invest. They only give you the naira difference, but accessing the dollar is a major challenge that a lot of them might have lost even opportunities because those funds are currently still within the country. So I think by and large is for the global economy, we're hoping that there will be no major a second wave of coronavirus warrants a major shutdown, and because it will also affect remittances also even to Nigeria, which is key. A lot of dependence there, and there's a way that link to is also it's still very strong. That if you are getting $25 billion annually, that's very significant when you look at it vis-a-vis even our current external results at almost $35–36 billion. So we need those inflows, we need the FPI, we need the remittances, we need the FDIs. But one recurring decimal factor is when are we going to resolve this the FX challenges? Yes, the CBN is trying its best on its own. There's a lot of jugglings that they have to do to see how this can be resolved, and also trying to preserve the naira as much as possible.
Well, I mean, Mr. Boyereji, I really agree with you. We need to address the FX challenges. I mean, the FX window has been there since 2016, trying to provide some level of predictability, like you said, hedging, but yet there are still underlying challenges. And you said devaluation has also affected the mood of fund managers and prospective investors. So definitely this is one singular issue that is being debated, and hopefully we would have a headway in how we address it in a manner that would augur well for the economy. But in just 1 minute, what is that major aspect of this FX challenge that needs to be addressed in terms of specifics?
I think it's more of liquidity, providing liquidity and confidence. So because of the confidence that has been lost, we may need to clear the backlogs, ensure that there's liquidity before we even start to address and discuss with the investors that this will not happen anytime soon again. So it's more providing liquidity. I know the CBN is trying to see how they want to conserve the reserves. Yes, even it looks robust at $35 billion, but they are trying to see how they can buy time, see how if oil price would increase so that the operation of the reserves can also improve.
Yeah. All right, definitely. I know that there are a lot of pressures for the CBN, even from the fiscal policy realm, but definitely the one major takeaway here is that the FX liquidity issues need to be addressed so we can get on board to the receiving end of capital inflows and investments. Thank you very much, Mr. Ayodeji, investment professional. We hope to have more of this conversation, looking at one singular issue is how we move forward in the area of foreign exchange management, monetary policy, and also fiscal policy as it affects the market.
Thank you very much for the time, and looking forward to those conversations. And that will be all for this edition of the Market Review. You can send your views and comments to news@proexchange.com. What do you think about the current foreign exchange management approach in the country, and what is the way forward in making it a way that can attract more capital inflows into the country and boost confidence for foreign direct investment, foreign portfolio investors, and other investors, including fund managers. You can also join our website, www.proexchange.com, to watch our videos, read our news reports and analysis. To come your way again, let's make it an interesting edition during this week. Thank you for watching. Have a nice day and stay safe.